giving just a brief overview of the open banking regime in the UK.
Okay. The regime is created to address the concerns that we found when we looked at the UK retail banking market in a two-year inquiry which finished in 2016. And it comprises a forum for the discussion of standards because we required the major banks to adopt common standards for APIs, security, and data formats. And on top of that, we placed what we call an implementation trustee. So we have a forum where the banks meet the fintechs and consumers to agree standards. And in the event that they can't reach a consensus, the implementation trustee has the casting vote. So they will have to abide by his decision if there's any disagreement on the technical standards.
It's still early days. Do you see the regime actually improving competition in the sector? If that's the case, how is it occurring?
Well, it's starting to happen, but as I said before, this will take time, and less seriously, we're not boiling a kettle. We're planting a tree. This is going to take years, but you can see the early beginnings of it in two sorts of ways. One way competition will accelerate, I think, is in enabling people to find a better bank account for their personal needs. That's particularly true with small businesses because in the UK, bank accounts for small businesses are charged on a per transaction basis, unlike the free-of-fin credit model, which is used for most personal accounts. So if you're a small business, the amount a bank's going to charge you will vary hugely depending on how much cash you pay in each week, how many checks you pay in, whether you have any foreign currency needs, and so forth. So it's really hard to compare one bank with another. Open banking will make it very, very easy for you to do that because it will allow you to share your transaction history as a business with a potential banker. The second, more interesting way is much more dynamic, and that we are starting to see this happen. That will entail the unbundling of personal current accounts. Current accounts are a bundle of services. It's a place to keep money. It's a payment system. It's a place for short-term credit if you're caught a bit short at the end of the month. Now, some of those services are very profitable. For example, unarranged overdrafts are very, very profitable for banks. So if a firm could come in and offer short-term high-interest credit as an alternative to the bank, using access to the customer's account to drive that, then that could make a big difference because the bank's most profitable customers would suddenly be exposed to upstart competition, new digital competitors, and that's already happening in the UK. The proposition being that the provider will watch your balance. If it looks as if you're going into the red, they will pay in some money to stop you going into the red just for long enough to keep you out of an overdraft. And they will guarantee to charge you less than your bank would have charged you for that overdraft. On the more positive side, they'll monitor, with your permission, monitor the balance you keep. And if you say, I don't want to keep any more than $2,000 in my bank account, if your balance goes above that, they'll take it out. They'll put it into an interest earning account for just as long as it needs to be there. And they will guarantee to offer you a higher rate of credit than your bank would offer you for that balance in the current account. So two very different mechanisms of action, if you want, both of which we could see happening in the market now.
In Australia, the consumer data rights are going to be rolled out first in the banking sector on similar terms to the UK's open banking regime, but then it's going to be implemented in other sectors, with telecoms and energy to be next. Are there any plans in the UK to provide for a consumer data right in sectors other than banking?
Well, we admire very much what's going in Australia. We are aware of it, and we are in touch with the ACCC about its implementation. And yes, we are actively looking at learning from the Australian model. Maybe not in terms of a broader data right, but certainly looking at the regulated sectors here, like energy, like telecoms, so forth, whether there is a read across from open banking to those sectors. And the thinking so far, I think, is that where consumer behavior drives charging, where the pattern of behavior drives charging, and where consumers differ in their usage of a service, probably is useful. So mobile phones, for example, yeah, because people use their mobile phones in different ways and in different places too. So if you can download your usage history and present it to a variety of providers, it'll be easier to get a deal that suits your particular needs. Less clear in other sectors. In the water sector, for example, I don't think even if I had a smart water meter, I don't think it would tell the water company very much about me. So in some sectors it probably works a lot better than others. But yes, we're looking at it.
And are there any tips that you'd give Australia on implementation of the open banking regime based on the experience so far?
That's a difficult question. I think without getting too much into the detail, I think one issue to make sure of is that one is very clear about what is leaving in the competitive space and what is going to be regulated. And this is more about the detail of the implementation rather than the broad principles. Some of the problems that we've had here since the whole thing launched in January this year has been with the authentication journey. And the authentication journey for the consumer in some cases entails going through lots of different screens, maybe using a PIN Century or card reader device, maybe even getting a call from a call center to actually make the thing happen. Some banks have more frictionless journeys than others. I think it would be good advice to make sure that from the regulator's point of view anyway, that they take a close eye on what those authentication journeys amount to and don't just leave it in the competitive space, because that's a competitive space where banks might not particularly welcome the arrival in their markets of digital competitors.